Hello there, Hector Davil here once again. Welcome to a new video. Today we are going to review the type of patterns that I like to trade from an intraday point of view. Alright, I've selected 4 different patterns. Alright, these 4 that I've listed here, and the reason for that is because those are the ones that over the years have given me the highest win-loss ratio. Okay, basically these are the 4 most reliable intraday trading patterns that I've developed again over the years. And well, my point with this video is to show you how to trade, first of all, how to spot them, how to recognize them on your forex chart, and then obviously how to trade them. Okay, we are going to be reviewing each of them one by one. Okay, obviously we are going to start by the most basic one, intra-week trends, how to trade intra-week trends, then breakouts from congested areas, then continuation swings or continuation moves, and then reversal moves. Alright, those are the 4 types of patterns that I like to trade over and over and over and over again, because the outcome of those patterns are rather reliable and predictable. Alright, okay, let's get going. Alright, first tradable pattern, intra-week trends. As you know, a trend is nothing but a directional bias in the market, and since we're going to be searching for intra-week trends, we'll just take a quick look into what's been going on in the last, let's say, 2 or 3 days. You don't need more than that. If you see that during the last 2 or 3 days, price has been giving us the typical trending zigzagging pattern, right, where price scores lower swing highs and lower swing lows in a downtrend, or higher swing highs and higher swing lows in an uptrend. Well, that's just the definition of a trending scenario. Okay, what we are going to be searching here is to identify those horizontal levels where price, again in a downtrend, found support. All right, basically exhaustion points on the previous swing. All right, so once price gives us a retracement and a full new thrust in the direction of the trend, basically breaking through that particular level of support, what we want to do here is just mark that former level of support and see whether it becomes resistance next time price gives us another retracement to retest that former level of exhaustion. All right, basically what we want to do here is to apply the universal trading concept of former support. All right, may work as resistance now. This is one of the strongest trading patterns. All right, former support working as resistance and search for the bounce of that level. Okay. Again, this is one of the most reliable patterns of all. So what you want to do here is to exclusively base your trading decisions around horizontal levels. That's why I don't really pay attention into trend lines as far as intraday trading goes. In my opinion, again, from an intraday point of view, horizontal levels of support and resistance are way more reliable. In my experience, I've always been able to squeeze a higher degree of risk out of horizontal levels of support and resistance. And nowadays, it's pretty much the only level that I look for. Okay, the only type of support and resistance that I look for. I don't really look into trend lines anymore. Now, as I was saying before, you don't really need gigantic trends, okay, taking place over, I don't know, 10 days in a row. No need for that, okay? Again, intraday trading has a very short memory span, so if you see that price has been more or less trending for 2 days, that's enough, okay? That can be considered as an intra-week downtrend in this case. You can use the daily box indicator for that if you want to have a visual reference. If you see 2 days in a row printing red boxes as per the daily box indicator, well, that's certainly a downtrend. Obviously, if you see 2 or 3 purple boxes, then that's an uptrend. Okay, that's usually enough. Okay, now I'd like to give you now a tip that's equally applicable regardless of the time frame. All right, regardless of whether you are searching for intra-week trends or long-term trends, there is one quick tip that can help you determining whether the trend is still strong, is going strong, or whether it's losing momentum, and that's by the length of the swings. Now, let's assume again a downtrend in a scenario, and you have this swing down. All right, price taking, giving us a swing thrust in the direction of the trend. Finally, we find the exhaustion point from where the retracement begins. Obviously, you can draw that horizontal level of support and resistance right off that point. Eventually, the retracement dies out, and from that point on, well, a new full thrust, again, in the direction of the trend begins. Right? Well, you want this new thrust, all right, this new thrust to be more or less the same in length, all right, as long or as large, basically the same length as the previous one. That means that the trend is still strong, it keeps on pushing in the direction of the trend, and that the bears, since this is a downtrend, or the bulls if it was an uptrend, but well, in this case it's a downtrend, so it means that the bears are still in control in this market. So as long as they are in control, they are able to continue pushing price in momentum to the downside. In the other hand, if you have this swing down, the retracement dies out, a new full swing kicks off, and price simply pips below the former exhaustion point before the retracement begins, before a new retracement begins, well, be very careful here, because that's an early signal of trend exhaustion, of trend weakening. It means that at each consecutive swing, the bears only manage to push price down for just so long. All right, this was a large swing, this is a smaller swing, maybe an even smaller swing, and then you see how price begins to come or to bend to the upside, and eventually you will see that more often than not this leads to, well, the previous swing high is taken out and price begins to actually zigzag in the other direction. Higher swing lows, higher swing highs, and well, the whole downtrend finally comes to an end. Okay, so again, I must repeat this. This is important, guys. You need to make sure that the new swing, all right, is at least, the last swing is just as long, more or less as long as the previous one. All right, that means that upon the breakout, you want price to take off. Well, to take off in momentum. All right, as at least this distance here should be as long as this distance here, from the beginning of the swing all the way to the breakout point. Well, the bears should be able to drive price down from breakout point to exhaustion point just as long, all right, or at least for just as many pips in this portion of the chart, at that junction of the chart, as in here. Okay, that means that the trend is still strong, it's still healthy, and then once you get the retracement, you are gonna get, since the momentum is still to the downside, you are gonna get nice short opportunities again for a full new swing in the direction, obviously, of the trend. Now, as I always say, the markets are not perfect, so do not expect this retracement to, touch right to the pip and to bounce off that level. You occasionally see price breaching above that breakout point just to immediately after come back down. That's still okay. What you don't want to do is actually the opposite. You don't want to see this. Whoops, sorry about that. Price falling shy of that breakout point. You want the retracement to come at least all the way up there, at least to touch that level. If it doesn't, any bounce opportunity you may get below that level without actually touching or reaching back to that level, that's that's not the type of bounce you want to trade. Okay, so either this type of formation or this type of formation, all right, is equally valid. Okay, ideally, obviously, the ideal situation is price coming to retest that level, and from there, well, to find rejection to the downside, a bounce to the downside, and well, that's where we would zoom into the trigger chart, which we are going to cover how we do it and what type of signal we find or we trigger our trade-off. Well, we are gonna see that on a future video. But like I say, the ideal situation is price retracing to the nearabouts of that breakout point, all right, that former exhaustion point, and from there we'll be zooming into the 15-minute chart, searching for our bounces. Alright, well, let's take a look into a prototypical intra-week trendiness scenario where we get a strong bias into, well, one given direction. In this case, obviously, to the downside. As we can see, the daily box indicator has been giving us a few red boxes in a row. So, well, obviously, we are downtrending as per the last few days, right? So, what do we have here? Well, swing down, swing up, swing down, swing up, swing down. Okay, we as price zigzags in the direction of the trend, okay, we simply keep on marking the levels of resistance and the levels of support right there. As price breaches through that level of support, in this little retracement here, doesn't quite come to retest that level, right? Doesn't come reach up to retest that level. And as I was mentioning before, you don't want to trade bounces that retrace nowhere near support or resistance levels, okay? Because this bounce happens in the middle of nowhere. You only want to trade bounces of levels of support and resistance. So this is not a bounce you would trade, okay? So up on this little new swing, price takes off on a whole new swing to the downside. So therefore, we have a new exhaustion point and a new support point and a new resistance point in this trend. Okay, basically we mark the beginning at the end and the end of the last swing. Okay, so we get the breakout of this new level, price takes off on a new swing, another retracement, and this time around price does come back to retest that level right to the pip. In fact, if I actually draw a straight line, we can see how price does breach, okay, just a little bit, okay, just for, I don't know, 5-6 pips. But as I was mentioning before, the markets are not perfect, right? And therefore we cannot expect levels of support and resistance to be respected right to the pip. But at any rate, we can indeed see how we get a sharp bounce off that area. That's where we would zoom into the 15 minutes time frame, and as we will see on a future video, that's where we would trigger our entry, because it's a bounce of a level of support. Okay, now obviously we have, once the new swing takes off, we have a new support point, all right, and a new resistance point, which is obviously this one there. All right, every consecutive swing we just keep on adjusting our levels of support and resistance within this trend. Anyway, actually, if we scroll forward, we will see that price on the next swing, which is this swing down here, kind of give us another support point. All right, so we simply readjust and see what happens on the new swing, breakout, pullback, and price comes to retest that level. Again, another temporary, a short or a quick stop that price takes to that level, but it fails to push up. Instead, what we get is the bounce, and obviously any short signal we may get on the 15 minutes time frame up on that bounce of, let me actually stretch this line. All right, there we are. Any short opportunity, any short signal we may get on the 15 minutes time frame, since it's happening right off a level of support, okay, that's a short opportunity we would want to take. All right. All right, let's take a look into another example. In this case, this time around on the euro against the Australian dollar. Similar outlook, quite frankly. A few red boxes in a row, meaning downtrending price action from an intra-week point of view. All right, and then as price, as in a trendiness scenario, all we want to do is to simply mark the key levels of support and resistance. We have a level there, support and resistance. Price breaks through, takes off on a whole new swing to the downside, finally giving us an exhaustion point to readjust our former level of support down to the new one. All right, price breaks through, takes off on a whole new swing, comes back to retest. You see that? How comes back to retest former levels of support, now working as resistance as price comes to retest that level. If it respects that, okay, if it respects that particular level, meaning that we don't quite get a breakout, but instead we get a bounce, just zoom into the 15 minutes time frame, as we are going to see on a future video, and simply take the first short entry. That's a valid opportunity. All right, and well, as a result, bang, off it goes into a whole new swing, breaking through the previous level of support, okay, the previous exhaustion point on this new swing, right? And our job as a trader is to simply readjust our support levels from there down to here, and we just do exactly the same thing next time around. Once this full new thrust dies out of momentum, and therefore price begins to retest, we again just monitor price action around former levels of support on the previous swing, and just wait to see if we get the same market reaction once again. Once price comes to retest that level, do we get the breakout? No, we don't. Instead, do we get a bounce? Yes, we do. If we do, you know what to do. 15 minutes time frame, take the first short opportunity, off it goes for a whole new swing. Again, these patterns are recurrent, they happen over and over and over and over, and if you keep on exploiting them, as long as you master those few patterns that we are going to see on this video, you don't need more than that. All right, just few high probability trades, high quality setups, and keep on exploiting the same thing over and over. As long as you have a wide range of options as per the different currency pairs that you are going to follow, chances are that almost every day you are going to find one of these recurrent patterns in one of those different currency pairs. And as long as you just get one valid trading opportunity per day, hey, that's more than enough. These are high quality setups, okay, high probability setups. You just need one out of those 15, 16 different currency pairs you are going to follow. You just need to spot one of these few patterns that you're going to study on this video, such as, again, this intra-week trending pattern. All right, and as I was saying before, as long as you find one trading opportunity every day or even every second day, that's more than enough to grow your account over time. Alright, well, now let's review the second pattern that I like to trade, breakouts from congested areas, okay? And, well, I'm gonna show you exactly what this pattern is all about. Okay, well, let's start off by defining what a congested area or a range is. Which is nothing but simply an area where price has no directional bias, right? It simply flaps up and down. Okay, it just keeps on flapping up and down with the swings topping out and bottoming out at around the same level, and therefore we can define a horizontal line of resistance above price and a horizontal line of support below price, completely entrapping the price action. Alright, also if you use the daily box indicator, you will see that the highs for the different boxes, okay, will probably more or less fall in line, okay, with each other, and same thing with the lows, okay, both of them more or less lining up at the same level. So at the end of the day, what we have is just two key levels of support and resistance where price keeps on bouncing within. All right, course of action here, well, as usual, just wait for price to break free of the congested area. We need a breakout, guys, here. Okay, impossible to make money. Trust me here, it's impossible to make money as long as price moves within, or as long as price keeps on moving within the range area. We need to see where the market flow is heading towards. And in order to determine the direction of the flow, All right, we need movement. Okay, flow equals movement. And here there is no movement. Price simply moves sideways. All right, there is no move up, no move down. Again, there is no directional bias, so we need to wait for the market flow to actually kick in the market, and then we'll be trading in that direction. So we'll just wait for the breakout to take place, but we are not going to trade the original breakout. No, not at all. We are not going to take any trade as the original breakout is taking place. What we are going to do is to simply let price drive away from the congested area and then wait for a pullback to retest breakout points, meaning that well, former level of support if we get a breakout to the downside, or if we get a breakout to the upside, we're gonna let price drive away, wait for the retracement to retest former levels of resistance, and from there, once we get that retracement, just analyze price action. Again, always ask yourself the same question: are we getting a breakout or are we getting a bounce? If we do get a breakout, then we are not interested in that trading opportunity. If we get a bounce, if price respects that level, what are we to do? As usual, zoom into the 15 minutes time frame, as you will see on a following video, and then you are going to be searching for your trading opportunities right there on the 15 minutes time frame. But again, just let price drive away, then let price retrace back to that level, and that is where you will be taking your trading decision depending on what market reaction you get there once price actually comes to retest that level. All right, obviously you want to see a bounce. Okay, obviously you want to see a bounce, because if you don't get the bounce, instead if you get a breakout, you will take no trade. Now, here's something important, guys. You want to see the breakout here happening in momentum. That means that you want price to drive away breakout levels, that former level of support. Well, you want price to accelerate away from that level. All right. What you do not want to see is a shy, wobbly, shaky breakout, price simply batting around that area, not quite gathering the momentum to, indeed push price away from breakout points. You don't want to see that. Again, guys, I know I'm repeating myself, but it really is important here. You are trying to determine the market flow. Flow equals move, okay, or movement. So you want to see movement away breakout points. All right. If price remains stagnant around there, then there is no flow, right? There is no flow at all. So what you want to wait, or you want to see, is as the breakout takes place, you want to see acceleration, price moving solidly in one direction, and that usually signifies or represents in your chart long candles. If you see long candles around breakout levels, okay, that would be a long candle there, obviously colored in red, since, well, it's a breakout to the downside. You should see long candles in green if it was a breakout to the upside. Well, if you see momentum breakouts on the 1 hour time frame with those long candles, that's usually a good indication that the breakout is actually happening in momentum, in trading volume, and therefore the market flow is beginning to appear in this market after a period of sideways congestion. So again, once you see that, wait for the pullback and then just wait for the retrace, for the bounce. If you get the bounce, if you don't, again, if you get the breakout, you don't trade that. Now, let's take a look. Let's take a look at some live examples. Okay, let's take a look at the euro against the American dollar, 1 hour time frame as usual. Let's analyze this chart as per levels of support and resistance. What do we get? Well, we get resistance there, support, resistance, support, resistance, resistance, support. Okay. Also, we can see how the daily boxes indicator are more or less bottoming out, all of them at the 144.50 area, and more or less topping out around the 145.50, even though we got a little bit of a fake breakout there. But at any rate, price has been entrapped within this area to the upside and within this area to the downside. Okay. See how price has been simply flapping up and down in between those two levels. Okay, sideways price action, no clear, no directional bias at all, right? So we mark the horizontal boundaries, that's to the downside, and this one would be to the upside. Okay, and course of action, again, just wait for the breakout, just wait for the breakout, and the breakout finally happens here. See what I was talking about before, long candles on the breakout. Okay, as the breakout is taking place, you don't want to see small candles, I don't know, such as in here, these small candles there, do you see that? Or small candles such as in there, none of that. You want to see a massive candle breaking through a momentum, driving price away from the congestion, right? And therefore showing acceleration as price again pushes away from the from breakout levels. Okay, so eventually, as already established, we are not going to trade that initial breakout. We are not going to zoom into the 15 minutes time frame there. We're just going to let price go on its merry way, driving away from breakout levels, and then we are just going to wait for the first swing pullback to retest breakout points, meaning that former level of support. Again, 144.50. So let's just do that. Oh, there it is. That's the the breakout, and that's the pullback. You see how price right there came to retest that 144.50 area. Okay, once price does indeed come up there, or reaches up there, it's time to zoom into the 15 minutes time frame and take the first short opportunity at that level. And as we zoom into the 15 minutes time frame and we search for our short opportunity, which again you will see all about that on a future video, well, eventually what we complete is the breakout pullback bounce pattern that we want to search for, and as a result off it goes. All right, breakout, pullback, off it goes, and obviously giving us a whole new swing to the downside, and therefore, well, our valid short opportunity that we found. If we do find it, again, we will see all about that on a future video on the 15 minutes time frame. But at any rate, what I want to stress here is that how we can easily define the support point. Take a look at how the individual daily boxes, both of them, actually all three of them, line out at the same level, both down and up, right? More or less all of them at the same level. All right, and therefore we can easily identify our levels of support and resistance, and then again just wait for a breakout, moving price away momentum. Again, this momentum breakout candle is crucial, guys. It's very important to see that as price breaks through the support, and then just wait for the first pullback. Wait for the bounce. Hopefully that level will hold. If it does, zoom into the 15 minutes time frame, take this first short entry, and off it goes for a profitable trading opportunity. Let me now show you something that's actually happening right now as I record this video live. It's on the euro against the Swiss franc. It's a prototypical range boundary formation, all right? Range bound formation, sorry. As we can see, as per the last few days, if we take a quick look into the daily box indicator, we can clearly identify how the individual boxes have more or less been, well, certainly topping out at the same level, okay, 146.90, and bottoming out at more or less the same level, 146.45. Support, resistance, support, resistance once again, and now support. So resistance line, support line there, course of action, just wait for a momentum breakout, hopefully with a long bar, a green bar to the upside, and then let's wait for the pullback to retest breakout levels, okay, that level of resistance. If it holds, then we zoom into the 15 minutes time frame in order to trigger our first buy opportunity, or alternatively get a breakout to the downside, again hopefully in momentum, a little bit of a pullback, reaching back into that area. If that area holds the retracement, zoom into the 15 minutes time frame, and from there trigger our short entry upon signal. Very, very prototypical sideways price action, prototypical range, and well, again, a trading opportunity that may happen very soon. Today, I very much doubt we are going to get a breakout. Today is a little bit day. As we can see, the day is winding down now, so I will probably have to wait for tomorrow. But at any rate, this is going to be a trading opportunity I am going to be following myself on my charts for the upcoming trading session. All right, now let's now explain what the continuation moves are. I have my slide here, and this is more or less what continuations actually look like. So, what is it? What is a continuation swing or a continuation breakout? Well, a continuation breakout is indeed a breakout that takes place after a temporary congestion, a temporary ranging price action in the direction of the move that originally drove price into that congestion. Now, I understand that that may sound a little bit confusing. Don't you worry, I'm just going to repeat that. A continuation, again, is a breakout driving price away from a temporary congestion in the direction of the move that originally drove price into the congestion area. You see that? Basically what we have here is a move driving price into a temporary congestion, and eventually what we get is a breakout in the direction of that previous move. Okay, so we have down move, congestion, down move, or up move, congestion, up move, or up breakout. Now, the key here is obviously the congestion, the temporary congestion, which usually lasts around 24 hours. Usually is it's a 1 day congestion, okay, or a 1 day range. So what you usually see here is, if you are looking into the daily box indicator, is a red box, all right, where price moving down, then a little bit of a hesitation, a shorter box, probably either gray color, but at any rate price moving sideways, and then on the following day we get the breakout and we have the continuation move. All right, that's it. That's what this continuation pattern looks like. All right, this congestion area usually gives us, as we have a down move, we have a final bottom or exhaustion point from this previous swing, a little bit of a pullback, and then we get a double bottom, meaning that price rebounds off that level, and effectively, well, that helps us determining that double bottom and therefore that level of support. What we are going to be doing simply is just to wait for a breakout of that double bottom. All right, again, breakout, pullback, holding or retesting that level of support, holding that level, bounce, zooming into the 15 minutes time frame, search for our short opportunity, and off it goes. Okay. Conversely, the same applies if we are having, if we are seeing an up move, giving us an exhaustion point, a resistance swing point, a little bit of a retracement, another attempt to take out that level, but price rebounds off that level, and therefore we have our double top there. Then if we get a breakout of that double top, we know what to do. Simply wait for a breakout, pullback, and well, you know the rest of it. Now, occasionally, that temporary range, that temporary congestion area doesn't quite take the shape of a standard range, meaning that we don't quite get a double bottom and a double top, or what's the same, we don't get a flat line, a horizontal line of support and a horizontal line of resistance. Instead, what we have, or what we get, and this is very common, guys, so please pay attention here, what we get is what I usually call a flat bottom triangle if the original move is to the downside, or a flat top triangle if the original move is to the upside. Let's explain the flat bottom triangle. It's basically a range where we do indeed have a flat a horizontal line of support with that double bottom, but instead of having a horizontal line of resistance, what we have here is simply a leaning line of resistance. Okay, and that's our flat bottom triangle. Do you guys see that? Do you guys see now the triangle there? That's a flat bottom triangle, and trust me if I say this is one of the most reliable patterns of all. All right, move, flat bottom triangle, breakout, pullback, off it goes. This is one of the most reliable price patterns ever. Same thing applies if you have a flat top triangle. You have an up move, our double top, effectively giving us the flat portion of the triangle, but instead of price of coming back down here with this second retracement giving us a standard range, all right, what we get is simply this. That's our double top, and then this second retracement doesn't quite reach all the way down here. Instead, it just stops there before taking off for the final breakout, and that's our flat top triangle. Do you see the flat top triangle there? And eventually we just wait for the pullback, and again, you know what to do, trade the pounds. Flat top triangles and flat bottom triangles, guys, you know, mark these patterns on a piece of paper, redraw them once and over again, because I must repeat, these are two of the most reliable price patterns that you can find, you know, in the forex trading world. Okay, it's a price pattern that I love to trade over and over and over, because you can easily get up to a 75% of win-loss ratio once you become familiar with these formations in themselves. All right. Anyway, now let's take a look at some real examples. Alright, let me now show you a prototypical continuation pattern. Okay, we are looking into the American dollar against the Canadian dollar, 1 hour time frame. As we can see, price had been moving down for the previous days, red box, all right, and eventually it comes into a hold. Price begins to move sideways. As you can see here, we have a gray, a gray box as per this day, giving us a support level there, and the next day over, we get also a retest of that particular level, which is, to be more exact, the 104.50. All right, so move down. Price takes a breather or begins to simply trail sideways, giving us a support level and resistance, more or less of a range. As you can see, this is a standard range. Do you guys see that? That range, how price is simply flapping sideways within those range boundaries. Eventually, we get the breakout. Again, see that breakout bar? Right? Do you see that momentum breakout bar? You want to see those large full body momentum breakout bars, okay, driving price away, and then simply wait for price to pull back and retest that former range boundary, okay, after the breakout in the direction of the previous move, driving price into that congestion. All right, so as we get that pullback, you know what to do. We are going to zoom into the 15 minutes time frame and trigger the first short opportunity. As long as we get the bounce, we trigger that short opportunity. If we get a breakout back above, we just don't. All right, as simple as that. So do we get the breakout? No, we don't. Do we get the bounce? Yes, we do. So if we do, we zoom into the 15 minutes time frame, and off it goes for a whole new swing to the downside. Prototypical move into congestion, all right, or range, however you want to call it. At the end of the day, it's the same thing. All right, eventually breakout in the direction of the original move. Just wait for the pullback, and off it goes. Okay, let's take another example, this time around on the sterling pound against the American dollar, 1 hour time frame. Move up, price begins to trail sideways, giving us the resistance points there, okay? Exhaustion point, retracement, exhaustion point, little retracement, and eventually a breakout. This is actually, let me just mark it with straight lines. There we are. And there we are. You see how this second pullback doesn't quite drive price all the way down there, and therefore we don't have a standard range. Instead, we have a flat top triangle. Okay, flat top triangle, move up, range in the shape of a flat top triangle, and eventually we get a breakout. Let me zoom in a little bit more. Right there, let's see. Yes, let me scroll forward. All right, finally we get a breakout. Do you see that? Another breakout, nice breakout bar. Okay, long bar with long body, no wicks both down or up. A valid breakout bar. And then, breakout, pullback. Does it break below? No, it doesn't. Do we get a bounce? Yes, we do. What are we to do? Zoom into the 50 minutes time frame, get the first trigger signal for a buy opportunity, and off it goes for a nice profitable trading opportunity. All right. So please, guys, mind these type of patterns. All right. Flat horizontal lines as per the support line, and then a leaning line as per the a flat line, a horizontal line as per the resistance, and a leaning line as per the support, effectively giving us that flat top triangle move, flat top triangle, breakout, pullback, off it goes. Very, very high probability, high quality trading setups. In fact, one of my most favorite type of patterns that I trade on a regular basis. Okay, do you now want to see a flat bottom triangle in action? Well, let's take a look at this chart. Actually, let me zoom back out. Okay, so what do we have here? Australian dollar against the Canadian dollar. Move down, sideways, exhaustion point, another exhaustion point, effectively giving us a flat line, resistance, flat bottom triangle, breakout, pullback, off it goes. Profits to be made. All right. Again, please mind how this second swing up, the second bounce of that previous exhaustion point didn't drive price all the way up here, and therefore we didn't quite get a horizontal line, and therefore we didn't quite get a standard range. Instead, we just got a move, a flat line of support, a leaning line of resistance, finally a breakout in momentum. Again, breakout in momentum, guys. Breakout, pullback. Do we get a breakout? No, we don't. Do we get a bounce? Yes, we do. So breakout, pullback, zoom into the 15 minutes time frame, profits to be made. And well, finally, let's move on to the fourth type of pattern that I tried, which is reversal moves. All right, reversals, you'll see that it's very similar to continuation moves, but we are gonna get the breakout to the other side, okay, into the other direction. If you remember, in continuations, what we were getting, or the type of patterns we were trading, was basically a move into a hesitation or congestion area, and then a breakout in the direction of the original move, driving price into that hesitation or congestion. Well, now we're just gonna trade exactly the other thing around. We are gonna have a move driving price into congestion, but the breakout is going to happen to the opposite direction. Basically, this is a reversal formation because it signifies the end of this previous move. We are not continuing with that trading bias, we are actually reversing our trading bias, and therefore this former trend is going to come to an end. And the end of that former move, of that former trend, is gonna come by that hesitation, that temporary congestion, and as a result, a breakout in the opposite direction. Okay, that's why it's indeed a reversal. Now, as in the continuation pattern, this congestion, which is the key to this type of formations, can take multiple shapes. Okay, it can take the shape of a standard range, and then we have we have two tops to the upside, two bottoms to the downside, and eventually we just get the breakout of that resistance line instead of the breakout of the support line. Also, it can take the shape of one single swing point, all right, and up on the breakout, up on the double bottom, what we effectively have finally is a breakout of this previous swing retracement high, and therefore price now begins to score higher swing highs. All right, remember that a reversal by definition is, well, a move contrary to the previous move, and Again, as a definition, a downtrend is a zigzagging, formation with lower swing highs and lower swing lows in the case of a downtrend. Now, please mind that we are beginning to score higher swing highs, okay? Higher swing highs, and therefore that's not downtrending anymore, isn't it? That's not downtrending price action no more. So once we see that price breaks through this area, which again can be signified or implied in our charts by one single swing point or by two of them, okay, I've seen both combinations. Well, what we are going to do is simply wait for the pullback to retest this breakout point, and from there we are going to search for our typical bounce. If instead of searching for a bullish reversal we were to see a bearish reversal, well, this will look something like this. Double top, breakout of this swing point, which again can be just one swing or two swings. So just for the sake of simplicity, I'm gonna mark just one swing. So that's our temporary congestion, and eventually a breakout of that swing to the downside. We are now scoring lower swing lows. We need to simply wait for the pullback, and from there for the bounce. That's where we will zoom into the 15-minute time frame, and that's where we are going to enter our trade. As usual, now I am going to show you some real example of reversal formations. Alright, well, we are looking into the euro against the Japanese yen. 1 hour time frame as usual. What do we see here? Well, we see a red box, at any rate, a healthy down move. You see how price comes all the way from here with a healthy downtrending price action as per the last few days, 2 days, okay, before entering a period of sideways, congestion, okay. Basically, price has been flapping sideways, hasn't it? So we can certainly define our level of support with this triple swing low there, okay? And also we can find price topping out at the 130.50, okay? Here we get a triple swing point high. Before in the slide presentation I was mentioning that, well, you can get multiple combinations, just one swing high up on a double bottom, right? And then just wait for the breakout, or you can also get a double swing high and then again another range and wait for the breakout. Well, this time around we actually get 3 of them, all right, and also 3 swing points to the downside. Again, I've seen plenty of combinations. What's important is not how many swing highs and swing lows we get. What's important is that that's actually a range, okay? Red box, red box, red box. Then we see a little bit of a gray box there, and eventually a purple box. All right, do you see how this is a reversal? All right, let's identify the key levels in this reversal. So price comes down all the way from here, enters a period of sideways price action, a congestion area, triple swing point high, swing lows there, resistance above, support above, certainly a range. Course of action, just wait for the range breakout. Eventually the range happens, the breakout happens to the upside, and therefore we are facing a reversal. If we got a breakout to the downside, we would be facing a continuation. So once we get the breakout, what do we have to do? Just wait for the pullback, which we do get. You see how we get a pullback to retest that former level of resistance? Right there again, 130.50, and then do we get, as usual, we ask ourselves the typical question. Do we get a breakout? No, we don't. Do we get a bounce? Yes, we do. We zoom right there if we do, which we do indeed, to the 15 minutes time frame, and we take the first long entry, the first long signal, and well, off it goes for profits to the upside from 130.50 to 131.50, 100 pips within the day. Not too bad, 100 pips in one single day. Prototypical move, congestion, reversal breakout, wait for the pullback, and off it goes. Prototypical formation. All right, let's take now a look into the euro against the American dollar. As usual, 1 hour time frame. Actually, this is a very recent setup. Trading opportunity actually happened yesterday. Right, this is today's price action. Okay, that's current market price. But if I scroll back, you will see the reversal that I am talking about here. Okay, what do we see here in this particular? Well, in this particular scenario, red day, gray day, purple day. What is this, guys? This is another reversal, isn't it? All right. Well, let's define the key levels for this reversal and how we would go about trading that reversal. So we see price certainly coming all the way up from here. Okay, all the way down to this exhaustion point. All right, we mark that level as well, certainly as a support level in this particular down move here. Okay, so we have our level there. Price for this day tops out at that level, and then throughout the day gives us another swing high at that point. Seems like price is indeed finding resistance around the 137 double O level, isn't it? All right, double top there. Then we have support, another swing back here, and then, well, eventually we have here is another congestion day. You see how price opens there, closes there. That's why we have a gray box as per the daily box indicator. And then the next day over is just a matter of waiting for a breakout. We got a breakout to the upside, and then we have a pullback to retest that 137 area, which, if you remember, was working as a resistance. Right, basically we have former resistance. Once broken, now it comes back to pull back. It pulls back to retest that level. Do we have a breakout? No, we don't. We have our typical bounce. We zoom into the 50 minutes time frame. Off it goes for more intraday profits. Now, if you actually pay closer attention into this chart, you will see. Well, actually, let me use a straight line. All right, blue line there. So that's our flat top triangle. Remember flat top triangle, guys? Now we obviously get the breakout to the upside. We are getting the horizontal line and the higher swing lows pointing in the direction of the breakout. Usually whenever you see a leaning triangle or a triangle where one of the lines is horizontal but the other one is actually leaning or diagonal, however you want to call it, the diagonal line more often than not can give us a clue as of where the breakout, okay, as of where the breakout is going to take place. All right, in this case, to the upside. All right, to the upside. Obviously, it doesn't always happen like that, but more often than not, I've kind of noticed that the breakout does tend to happen in the direction of the flat line. How is that? Well, because price, as it builds or as it scores higher swing lows, it means that it's basically building pressure upon that particular level. Price is simply building pressure, and eventually that horizontal line cannot keep up with the pressure, with the buying pressure anymore, and eventually it gives way. That's why flat top and flat bottom triangles are such a reliable trading opportunity whenever the breakout eventually takes place in the direction of the flat line, of the flat side of the triangle, because it means that the market is building pressure up on one side, the other one is just defending itself, and eventually just cannot defend that position, that level anymore, and the market simply opens up like a can of worms. It just gives way, and eventually, as we get our pullback, that's our entry opportunity. All right, so fantastic reversal trading opportunity in the shape of a flat top triangle with that swing, double swing point to the upside, and that leaning line signifying the support within this range. But at any rate, regardless of the shape of this triangular formation, even if it was a standard triangle, a standard range, meaning two horizontal lines, if it still would have been a valid trading opportunity. Okay, red day, gray, purple, typical reversal. Alright, well, that's about it for this video. We've already covered all four different tradable patterns or patterns that I like to trade myself. These are the ones, the patterns that have given me the highest degree of success, the highest win-loss ratios over the years. Alright, that's why are the four patterns that I am willing to pass on to you. I think, like I said, they are the most profitable patterns that I've found from an intraday point of view. Okay, now obviously I do understand that it's going to take a little bit of time for you to visualize these patterns on your charts. You cannot expect begin finding these patterns the very first second you sit at your trading station upon viewing this or upon watching this video. It's going to take a little bit of time, guys, but don't rush things. There is plenty of time. All right, just give yourself some time. Do spend some screen time, in front of your charts, and trust me, little by little, with a little bit of a screen time, these patterns are just going to pop up for you. You're going to be able to recognize them right away whenever they are presenting themselves, and therefore you will begin finding more and more trading opportunities as time passes, and obviously as you gain experience with this intraday market flow system. All right, okay folks, that's all for this video. I'll see you on the next one. Bye bye.